Y'all, this is Rachel Hernandez, aka Mobile Home Girl of the Adventures of Mobile Homes podcast. Thank you so much for joining me here on another special guest interview here. I've got Brian Davis from Spark Rental, who's been on the show in the past, and we are going to just basically catch up. We're going to talk about what he's been doing, talk about some amazing opportunities for real estate investors, mobile home investors, and all that. So without further ado, thank you for coming back to the show, Brian.
Oh, Rachel, thank you so much for having me. I'm pumped to be here.
First off, for those folks who missed the episode when you first came on the show, can you tell us a little bit about Spark Rental, what y'all do, and how you help real estate investors?
Yeah, so Spark Rental is one of those businesses that has evolved quite a bit over the years. They say that when you go into business, what you think your business is not necessarily what the rest of the world thinks your business should be, and that has certainly been the case for us. But our mission and our core business has evolved over the years to focus on running an investment club for people to invest passively in passive investments like syndications, like private partnerships, private notes, real estate equity funds, real estate debt funds, any kind of hands-off real estate investment that people can invest in from anywhere in the world. And that started with me, as I spend most of the year overseas. My wife and daughter and I spend most of the year in South America. I was just telling Rachel before we hit the record button that tonight we're flying out to Uruguay for a week-long vacation to have a little road trip and do some wine tasting and do some hiking in national parks and all that kind of fun stuff. But I cut my teeth as a rental investor back when I was in my 20s. And even if people talk about rental properties being passive income, it really wasn't very passive, at least for me. And when we first moved across the world, we moved out of the country about 9 years ago. I still had most of my rental properties. I had, I don't know, 15, 16 rental properties. And it wasn't passive. I mean, I realized when I left and I was no longer there to be involved, I realized just how much I had been subsidizing those properties with my own labor, even though I had a property manager. So, fast forward 9 years later, I no longer own any of those rental properties. I only invest passively. And that's very much by design. I want to be able to live anywhere in the world, invest from anywhere in the world. I don't want to be on call. I don't want tenants showing up at my door at 9 o'clock at night, which has happened to me before. I don't want people calling me on my nights and weekends and vacations. I just want to click a button and invest and be totally done with it. So anyway, that was a long-winded answer to a short question.
I completely hear you, Brian. I mean, that's one of the things I've gone into wholesaling mobile homes myself. And no, it's not passive to be a buy and hold real estate investor, mobile home investor, landlord. Someone needs to oversee those investments. And if it's not you and you have a manager or managers, in my case, then you have to oversee those people. So
Right.
it's just one of those things, which is why I've refocused my business and gone into the wholesaling portion for the mobile homes, which was basically how I started when I first got into real estate investing. But so let's talk about pretty much since the podcast episode, I believe you were here. It was basically podcast episode 64. What are you up to now? What other opportunities do you have for investors who want to invest passively and all that?
Yeah. So, first, just kind of a big picture overview. So when I say that we run an investment club, I mean that in like the old school sense of the term. So if you imagine like a bunch of people in the 40s, like smoking cigars in a wood paneled back room somewhere and like, sipping, snifters of brandy and talking about stock investments and then going in on those stock investments together. That's kind of what it's like, but it's for passive real estate. The term investment club gets really misused in this industry. And a lot of people refer to like their email list as an investment club, which is just silly to me. So we are not a fund of funds. We don't get a cut of any of the money that's invested. We are just organizing a community of investors. So we meet twice a month, once to bring in some kind of outside expert to just come and give an educational presentation, and then another time to vet a deal together as an investment club. And we're pretty agnostic on the types of things that we invest in. And that's very much by design. One of our core principles is diversification. So that starts with the type of investment itself, whether that's a real estate syndication, whether that is a private partnership with like a mom and pop investor or a small investment company, whether that's investing in a private note. We invest in some large and small real estate equity funds, or debt funds that's maybe secured by real estate. All of these things, and none of them is better or worse than any of the others. They're just different. And we take that priority of diversification all the way across the board. So geographic diversification, and we want to invest in, every market, every state, every city. We want to diversify across different property types. So, not just multifamily, but mobile home parks, retail, industrial, all storage, all of that stuff. We want to invest with a lot of different investors, a lot of different operators, syndicators, sponsors, whatever terminology you want to use. Because one of our core principles here is that we don't want to be trying to predict the market or time the market or pick the next hot market. Every time I've tried to get clever in my investments, whether we're talking about real estate investments or stock investments, the universe has, force fed me a big old slice of humble pie. So,
I hear you.
yeah. So I'm of the opinion that when you diversify, you can avoid it trying to get cute, trying to get clever, and the law of averages will look out for you in the long term. And the way that works for us as an investment club is being able to invest small amounts, because when you can invest small amounts, you can invest every single month as a form of dollar cost averaging, which is how I also invest in my stocks, right? So every week, my robo advisor automatically pulls money out of my checking account and will invest it for me automatically. And it will automatically rebalance my stock portfolio for me, right? I don't have to think about that. I don't have to do anything. Every week is just pulling money out and investing in the same investments. So I want to bring that same strategy and that same mentality to my real estate investments. But that becomes really hard when you have to spend 50 grand, 100 grand on every single real estate investment that you make. For example, if you're investing in a real estate syndication by yourself, the minimum investment is usually 50 or 100 grand. Really hard to dollar cost average and invest, every month. If you have to invest 50 or 100 grand, you have to be very wealthy to be able to do that, or have a super high income to be able to do that. And likewise, the same applies to buying rental properties, for example, or even buying mobile homes. It's going to cost you tens of thousands of dollars between the down payment, the closing costs, the cash reserves required by the lender, and initial repairs that you need to make. You're still looking at tens of thousands of dollars, often 50 or 100 grand in those upfront costs. So again, it makes it really hard to dollar cost average your investments. So the way we do that is we go in on investments together as a club. So each individual member can choose to invest with 5 grand or more. No one has to invest in any of these investments, right? But anyone who wants to participate in a deal can do so with 5 grand or more, which makes it more accessible to practice dollar cost averaging and just invest month in and month out, without trying to get cute or clever in trying to time the market or pick the next hot city to invest in or any of that stuff. So, this is our approach to real estate investing. And it has worked well for us, even during a time in real estate investing that has been very fraught, for lack of a better term, for a lot of people. It's been a challenging couple of years in real estate investing, and we've still done fine because we are spreading small amounts of money across a lot of different property types, and just month in, month out, continuously investing.
Okay, that's a lot of information.
I
For
know.
sure.
I went down a rabbit hole there. I'm sorry.
For sure. So let's backtrack it a little bit, because you talked about, speakers and speaking, and the investment club, making a decision on what they all want to invest in. Let's talk about that process. Let's talk about these different types of investments and these different speakers that you all have. How does that process work? Yeah, walk us through that.
Yeah, so one of the main way that my partner and I add value to this club, aside from just organizing it and hosting the meetings every month and organizing the LLCs, the main value that we provide is networking with operators. So, every week we're out there trying to meet new operators, to get to know them, to vet them to some extent, although we can't tell people that we're vetting operators because we don't want to take on any liability for that. But that's ultimately what we're doing is trying to get to know as many people in this space as we can so that we can then invite operators that look like they're doing good work and look like they're actually achieving those asymmetric returns, those high returns with low risk. It's ultimately what we're looking for. So we will invite an operator to come and present a deal to our investment club each month, a different operator. And our members will all get together on a video call with the operator. The operator might speak for a few minutes, presenting their deal, explaining how it works, why they like it, and then we'll just grill them. We'll have an open Q&A with the operator, and ask them questions from 40, 50 different angles. We'll have 40, 50 sets of eyeballs on these deals, and by crowdsourcing the vetting of these deals, uh, we just do such a more comprehensive job of trying to poke holes in these deals from every different angle, trying to analyze the risk of these deals from so many different angles and so many different backgrounds. And I'll give you a quick example. We have a woman in our club who is an insurance adjuster. So, she's always asking operators about, well, how did you come up with these insurance figures? And, why are you only projecting this much growth in insurance premium costs every year? And it's great to be able to have, so many people from so many different backgrounds and expertises, all having their eyeballs on these deals. And it really, we believe that makes it lower risk when you have so many people all looking and vetting at these deals together. And then, any of our members who want to participate in that month's deal can do so. Like I said, $5,000 or more. Collectively, we usually invest in the 150 to 350 grand range each month. So, well above the minimum investment for these deals. And in some cases, enough to qualify for preferential profit splits or, a better preferred return on these than you would get if you invested by yourself at 50 grand or 100 grand, just because we're investing a higher amount. So that's the short version of how that all works.
That makes sense. That makes sense, Brian. So let's talk about, say somebody decides to go ahead and invest with the club, and y'all pick the investment. How do you keep the investors up to date on the investment? It is through you? Is it through the operator? How does that all work? And or do you have monthly meetings about that once they become an investor? How does that work?
Yeah, so we keep that really simple. We get an email from the operator or the sponsor. I'm just going to use the term operator because it's so broad. It's such an umbrella term that it kind of applies to everybody. You know, Once we invest in a deal, we get email updates, monthly or quarterly from the operator. And we just hit the forward button and pass those along to the members who participated in that deal. Wherever possible, we try to keep this club as simple as humanly possible. So, yeah, we want to keep it really easy for everybody.
That's good. That's definitely good. I think it is a good option for people who, one, they don't want to take the risk because it is risky because, there could be people like, why don't I just invest myself? You can, but if it's such a high cost amount, I've had a lot of mentors who've spread the risk because they've invested with other people. So I see that as a positive. Two, that you're already vetting the operators and you've been doing this for a while as well too, which is also a pro of doing it as a club. Um, can you tell me a little bit about the club, how it operates in terms of meetings And do y'all decide together on what types of speakers that you want to hear about? How does that whole process work?
Yeah, so we try to bring in a different educational speaker each month, just as additional value add for the club. And in some cases, these are operators who just have a really niche investment strategy that's different, that's exciting. Maybe it's someone who we later want to bring back and invest with. In fact, that's often the case. But it could be other experts as well. We had our accounting, the accounting company that we outsource all of our accounting to for these deals. We brought them in, I don't know, February, March, whatever, to just talk about some of the tax implications for passive real estate investments and also some of the strategies involved to minimize taxes for passive real estate investors. Things like the lazy 1031 exchange and stuff like that. And some more complicated stuff that the average passive investor maybe hasn't thought about. Things like how to prevent depreciation recapture, or how to mitigate that, and what are how does it work investing through a self-directed IRA or a solo 401k? What are the pros and cons and costs of all that? So we bring in different experts every month just to try to educate our members on not just different niche strategies that are out there that maybe we do want to potentially invest with in the future, but also some of the other implications and strategies involved in being a passive investor in real estate.
Yeah, those are some good questions because folks out there have, some of these vehicles that they have their money locked in, like an Roth IRA or some sort of, financial product, and how to get it out if they do want to, invest in something like this, passively. So that answers a lot of questions, which is great that you have and I know you've always been about more education and information so that people know exactly what they're getting into. And that's one of the reasons I wanted to bring you back on the show. So let's talk about, these opportunities. What types of opportunities do you have for people listening? I want to hear more. How can I learn more about the club, and get more information? And they're just in that phase. I'm willing to learn because I guess I get a lot of people, some students as well too, who I love what you're doing, Rachel, but I don't want to do it. I want it passive. So either they do something like this or they hire a team, but they still bring me on for consulting. So I consult them on the team that they're hiring to do the stuff that I actually teach. So let's talk about the opportunities that you've got for people to get more information.
Yeah. So, and to your broader point there, about how what we have found, and by the way, our business originally started as a service for rental investors, hence the name Spark Rental. But we got away from that partially because of just my own situation that I was talking about at the beginning of the show. But a lot of people, they want to diversify to have real estate as part of their portfolio. They want to invest in real estate, but they don't want to take on a side hustle of becoming a landlord or flipping houses or buying mobile homes. So they want those types of assets in their portfolio, but they don't want to have to become an expert in that. And real estate. So I feel very strongly, and I've seen this play out over the last 2 decades that I've been in real estate. Real estate can be very low risk and high returns, but to get to that point, you have to have a certain level of expertise if you are an active investor. And the average person, the average working professional, they don't necessarily want to become a real estate investing expert, right? But they still want those asymmetric returns. They want the low risk with the high returns that is possible in real estate if you are an experienced investor. I mean, Rachel, I have no doubt that with your business model of wholesaling mobile homes, it's very high return and low risk, right? Because you have gotten it down to a science and you are an expert in that field. You've developed that expertise. The average person doesn't necessarily have that expertise, but they still want those results that you're getting, right? So that's the problem that we are aiming to solve in our investment club. We want to find those asymmetric returns as a club, and we want our members to be able to invest in those without becoming experts themselves in any one of these different fields, micro niches in real estate. So I'll give you a quick example of, I'll give you a couple examples of what this can look like, what, deals that we've done this year in our investment club that I think absolutely strike that perfect note of asymmetric returns. So a couple months ago, we invested with, it's like a boutique house flipping operation in Michigan. And they do, I say boutique because it's a small company employees wise. I think there's, I don't know, 5 of them or something like that. But they do a high volume. They do 70 to 90 house flips a year. Um, so they do a lot of volume. They've got a large portfolio of single family rentals as well, with a couple multis as well. I think they have 120 units total, and they own a little over $15 million in real estate, $15.2 million, something like that, in rental properties, in addition to the house flipping that they do. And of that $15.2 million, they're only leveraged at, I think the latest was like 57% LTV. So it's low leverage, but they need a big like operating cash cushion to be able to move through these deals very quickly, because a lot of the deals that they do, the house flips that they do, they need to be able to settle within like 4 days, basically. I mean, they need to settle like lightning fast on these deals. They can't go through a traditional bank or even a hard money lender to do that. So they need a big operating cash cushion, or they need to raise money from private partners, which is a lot of what they do. So we partnered with them as basically a JV, a joint venture partnership with them to do a series of house flips. So our club invested a certain amount of money with them. I think it was, I don't know, low 300s that we invested with them. And so that is funding a series of house flips that I think we're in 3 different house flips simultaneously right now with them, with that money that we invested with them. And as those flips go full cycle and complete, the proceeds from that will be reinvested in more of these deals until the end of 2025. We wanted to close it out by the end of 2025, just for tax filing purposes. But Case, the guy who runs this boutique company, he has signed a personal guarantee for our money with a minimum annualized return of 8% for our money, and a corporate guarantee as well. His company being the owner of that $15.2 million worth of rental properties, with over $6 million in equity in it. So we feel pretty confident that, even if one of these house flips goes a little bit awry, we're still going to be fine, right? We have a personal guarantee from a multimillionaire and a corporate guarantee from a company that, has well over $6 million in actual equity in a $15+ million portfolio. And he's very candid about the win and loss ratio of these deals that he does. I mean, his win ratio is in the 93 to 95% range each year. And he's the first to say, look, real estate is, it's in the real world, right? And the real world is messy. Occasionally a deal is not going to go exactly according to plan. We miss occasionally on these deals. And that's why I offer the 8% guaranteed minimum return on these, because I want to protect my relationship with investors. It's basically a cost of capital, right, for him. And he can do that because he's doing the volume of deals that he's doing. He can afford to miss occasionally on these deals and still come out way ahead at the end of the year. So, that's sort of more detail than you probably wanted, but
No,
that's an
that's
example.
good. That's really, really good. I mean, my question would be, like, do you see y'all, is it a partnership or y'all private lenders? Is the club the private lender? How is that? How does that seen, from that perspective?
That's a great point. And something that I didn't cover in that long-winded explanation. It's a private partnership with him. We're JV partners on a series of these house flips. So we're partial owners on these deals. We are entitled to a certain percentage of the profits from each one of these deals, with a minimum baseline guarantee from him as far as returns go.
Well, that's great because I get a lot of people interested in doing JVs with other investors. on the mobile home side, and it sounds like an amazing opportunity because y'all are both in it, and you all want the same thing, in terms of the profit. And it seems like they've been doing this for a while. I was curious, how did they find you, or did you go out and find them? How did that work?
Yeah, that's a great question. So this is actually the second time that we've invested with them. The first time was with a flexible note that they offer. I touched on the fact that they need a lot of working capital to run their business. So one other way that they raise capital is through a flexible note that just has like a rolling 6 month term. So it's a note that you can cancel at any time with 6 months notice, basically, and it pays it pays 10% per year, and it pays interest monthly. So we invested with him a little while back, and so we've gotten to know him a little bit and his company and how they operate, his communication style, which we really like. But the way we found him originally, before doing that initial investment with him and that 10% note, was through it was someone, I believe it was a person who operates a fund of funds. She mentioned that she really likes Case and what he's doing as sort of like a small operator who's working at that mom and pop level with the single family homes. Um, so we were referred to him by another operator, basically, who had invested with him personally.
Yeah, I was just wondering, was it through networking or did they find you online? I know you do a lot of writing online, or through the YouTube channel, just to kind of see, what marketing avenues they found you through. So just good old fashioned networking.
Yeah, and that's how we like to find the operators who we invest with is through other operators. So, we try to follow the trail of word to mouth among reputable people. So, and that's how we end up finding these these smaller operators who we never would have heard of on our own. It starts with speaking with larger operators who have built a very long track record and a good reputation in the industry. We talk to them, and potentially invest with them sometimes as well. But the last question that we always ask them is, hey, who else do you like in this space? And who have you invested your own money with? And that is how we like to find other operators to invest with, because who better to refer us to an operator than someone who's in the game themselves and operating themselves.
Right, right, right. Now you mentioned other areas of real estate because this is Adventures of Mobile Homes, and a lot of people are interested in investing in the niche of mobile homes. So you mentioned mobile home parks, RV park. Like, how does that process work? Say, you've got some members of the co-investing club and they say, "Hey, Brian, I'd really be interested in investing in an RV park or a mobile home park." So do you, at that point, is that when you just try to go out and find the operators, or yeah, how does that work? Because I'm sure there will be people listening to this who are very interested in that.
Yeah, so we never want to force a specific type of deal. We take kind of an organic approach of, every week we get every day we get emails from operators saying, "Hey, this is our latest deal. Check it out." We're promising the world with high returns.
Me too. Me too.
Right? Yeah, exactly. And our we consider our job to be trying to sift through the noise with that and to find those deals that actually will deliver those high returns with very little risk, because yeah, they all promise high returns, right? But some of them come with very high risk. Some of them come with pretty low risk, and the real expertise lies in learning to distinguish the difference there. So, yeah, as far as finding, we don't want to try to force a specific type of property, but at the same time, we want to network with lots of different types of sponsors who are doing different types of deals, and to keep an eye out for deals that maybe we haven't done very many of in the past. We've done two mobile home park deals. I like mobile home parks. I think yeah, it's grown in popularity some over the last 5 or 10 years, but it's still nowhere near the saturation or the, the red ocean, as they say, that multifamily is, for example. Um, and mobile home parks tend to be inexpensive enough to fly under the radar of a lot of institutional investors and, like the big private equity firms and stuff like that. The mobile home parks tend to be too small for some of them, which makes them more accessible and leaves some more meat on the bone, if you will, for passive investors like us. Um, so yeah, we never want to force any of these investments, but at the same time, we do want to network with as many different types of operators as we can, and we do keep an eye out for, as diverse opportunities as we can.
Yeah, it's just interesting because it kind of overlaps like mobile home parks, RV parks, self-storage. It's pretty much in that it's not multifamily, it's not commercial, it's not industrial. It's kind of like in its own kind of category. So I'm sure there are people who are interested in those alternative investments for sure. For sure.
Yeah, we haven't done any RV parks yet. I'm interested in investing in some RV parks, just for diversification, like we've talked about. Storage is tricky because the barrier to entry is so low in self-storage that it's a lot of markets have become oversaturated with supply. Um, one of the lessons that institutional investors took away from the Great Recession was that self-storage is the ultimate like recession-proof investment, because it was like the only real estate asset class that did well while everything else tanked in the Great Recession. And that's not necessarily true. I mean, that is true. That was true then because there was a low enough supply and high enough demand that it did fine. But that's not inherently true, right? And we're seeing that now, that some markets have an oversupply of self-storage because it's so easy to build. You need minimal mechanical systems, and you don't have to worry about habitability or any of that stuff. It's relatively cheap and easy to build. So there's a low barrier to entry. So a lot of people have overbuilt them. Which is not the case with mobile home parks. Mobile home parks are the only type of real estate asset class in the country where supply is shrinking rather than growing, because municipalities don't want to greenlight the zoning for new ones. They don't like the zoning because it depresses property values, or it's not going to yield the highest property values and therefore the highest property tax rates. So municipalities don't like them, even while they talk out of the other side of their mouth that they want more affordable housing, right? So that's why I like mobile home parks in general. Is just it's a shrinking supply, but I mean it's the ultimate affordable housing. And in the event of a recession, where do people go? They go to affordable housing. So in that sense, it is a relatively recession-proof asset class. So anyway, yeah, another long-winded answer, but
No,
that's
that's
why I like mobile
good.
home parks.
That's good information. I mean, I'd be interested in your take, with the economy now with, commercial, because I'm hearing on the street that commercial is where it's at because, it is the time if that's what you're looking for,
You talking about
the
office buildings specifically?
specifically office. Yeah, it's specifically office because I mean then it's going to take a while, then you have to refill it, but if you're in the right location, I hear there's a lot of opportunities in commercial real estate right now. So
Well, what's the expression? Buy when there's blood in the streets.
yes, exactly, exactly.
Well, that's the challenging thing from a mental and emotional standpoint, with any type of investing, really, is that the time to buy is when everyone else is freaking out about and has like this negative chatter around any investment type. So when everybody is terrified of stocks, and the stock market's crashed, and everyone's got their hands flailing in the air about it and talking about how terrible stocks are and how, oh my gosh, the world is ending, don't invest in stocks. That's the time to invest in stocks, right? And it's the same thing with asset types in real estate. No, that's much easier said than done.
Right,
You
right.
because you have to everything that you read in the news is nothing but doom and gloom and negativity, and the sky is falling. So it takes a lot of discipline to go out and then plop down a bunch of money in that asset type that everyone else is throwing shade at in the moment. So
Right.
yeah, it's been a terrible few years for office real estate. Really going back to the pandemic, and the whole acceleration of the work from home trend. Um, that being said, offices aren't dead. We've been going through a period of recalibration with it, and I think we're at a point where no one really knows what the equilibrium is as far as what the demand will be sort of moving forward for office space. A lot of larger companies in particular have really pushed a return to office policy and mindset, and with mixed success. Um, a lot of corporations have been kind of thwarted on that by their employees. So yeah, I think no one really knows, what is the new normal for that, and I think we're all kind of figuring out what that will be. But I think I to your point, I do think that there's been the conversation around office space has been more negative than what the reality will end up being. So there is opportunity there because of that whole the blood in the streets that's been going on in office real estate.
Exactly, exactly. So there's a lot of information, a lot to talk about. So let's talk about, these opportunities. You've got an event coming up so that folks can get more information about the Co-Investing Club. Tell us more about that.
Yeah, so you and I are gonna be doing this again very shortly, October 24th, 3 p.m. Eastern. You and I are gonna sit down and have a live workshop where we're gonna walk through 5 different types of passive real estate investments that people are not necessarily very familiar with. So, for example, I've been throwing around the term real estate syndication on this show, and I realize that a lot of people don't know what a real estate syndication is or how it works, or what are the risks, what are the returns, what pros and cons and all that stuff. So we're going to dig into all that stuff together. So we'll talk about real estate syndications. We'll talk about private partnerships. We'll talk about private notes, real estate equity funds, and debt funds. And we're going to dig into those, and we'll give case studies of each of those that are real investments that we have invested in with our club, and dig into some of the nuts and bolts of these are the returns that we're seeing on these, and this is the risk profile for that investment, and this is why we felt really good about the risk profile for that investment. Just to kind of illustrate this and give it some texture and flavor, so that people can feel more confident going out and investing in some of those types of hands-off investments on their own. Obviously we'd love to have you, join us in our club, but we'll show you in that workshop how to go do this on your own, with other investors. Form your own little investment club if you want, with friends, family, neighbors, so you can each invest with relatively small amounts and practice that dollar cost averaging of investing small amounts month in and month out, with your real estate investments.
Yeah, it's going to be a fun old time. I'm going to be there hosting it with Brian. And what's the cost to attend this, Brian?
There is no cost. I'll tell you what the cost is. The cost is you have to show up and you have to call out the 90s movie references as we make them in the workshop. We've sprinkled, I don't know, 15, 20 90s movie references throughout the workshop. So that's your job as an attendee, is to call them out in the live chat as we're going. And bonus points if you can spot them all, if you can call them all out.
It sounds like very fun. So y'all have nothing to lose. I will put the information about the event in the show notes here so that you can check it out. I urge you to sign up for the event. Now, for those of people who they just can't make it, but they are interested, can they sign up for the event? Will they have access to a replay? How does that work?
Yeah, we will. we always aim to record these events, and 99% of the time the technology works out fine. So it is our goal to send out a replay for a couple days. We'll record it, or at least we'll aim to record it. We'll send out the recording and make it available usually for like 3 days after the event. So yeah, if you absolutely can't make it, you will have a couple days access to the recording. But if you can make it live, it's way more fun. There will be lots of bad jokes going on and lots of discussion. It's very interactive. And the second half of the workshop is really Q&A and just open dialogue about some of these passive investments. So, yes, we'll go through a pre-planned presentation for the first half of the workshop. Second half is all just open conversation about some of these investments. What we've seen, what's gone right, what's gone wrong. What have we seen in the real world? In the trenches of investing in these kinds of investments.
And some of the case studies that you're going to have, are they going to be some of the things that we talked about here in this interview? Because I'm sure, I mean, it's very interesting what you've talked about on some of your, investment portfolio, that I've never heard before, with these operators outside of the mobile home investing niche. So my question was with the Q&A, and people would have the opportunity to ask questions about those types of investments.
Absolutely. Yeah, we're going to cover a series of case studies, and and we can ask questions about other stuff too. I mean, we can talk about anything that you want to hear about with this. Happy to talk about it in the Q&A. I've been in real estate for 21 years now, almost 22. So I've seen a lot of things go right. I've seen a lot of things go wrong. Happy to talk about what's gone right, what's gone wrong. I'm an open book on that stuff. So happy to have an open Q&A and to dig into any additional details that you want about any of these case studies or examples that you want to hear more about.
I think it's a great way for y'all if you want to, spread the risk, get into something for a smaller amount of money, and that you don't have to manage yourself. Because, I will tell you, Brian talked about experience and doing everything yourself. I'm pretty sure I put more than the 10,000 hours to get to. I mean, I've been doing mobile home investing since 2007. And before that, I was single family home. So if you think about how many hours, it's 2024 right now to put into at my level versus spreading the risk, finding out some information about this investment club, and actually getting to meet some really like-minded people as well too. And I will tell you, Brian's been doing this for a while. I mean, I only bring people on the show that I trust, that, I've already vetted. So, and they're just here to answer your questions. So it's going to be a good time. It's going to be a good time. Again, it is going to be, I believe, was October 24th, correct? At
October 24th, 3 p.m.
Eastern. And definitely sign up. Sign up even if you can't make it, because there will also be a replay. It is free. You just need to shout out those 90s references when you come and you do a little Q&A, and we all get to know each other. It's going to be a fun old time. So with that being said, Brian, let's talk about how folks can get a hold of you. In addition to, I'm going to put in the show notes how to sign up for that masterclass on the Co-Investing Club. How can people get a hold of you? What's the best place to reach you?
Yeah, so our website, sparkrental.com, you'll see our Co-Investing Club front and center there, along with a whole bunch of other tools too for active investors, like real estate calculators, interactive maps, all that kind of stuff. And you can reach us on social media at Spark Rental, at all the major social media platforms. You can email us at support@sparkrental.com. Don't be a stranger. Reach out.
Sounds great. Well, I look forward to seeing you, Brian, at the masterclass, and everyone here listening. This is Rachel Hernandez, aka Mobile Home Girl, with the Adventures of Mobile Homes podcast, signing off. Thanks, Brian. Appreciate it. Bye.
Rachel, thank you so much for having me. This was a blast.
No problem. Thanks. Bye.